Hi, I'm Ken Steidel.
And I'm Lauren Lamb. And when you have tax debt, for instance, to the IRS or the Commonwealth of Pennsylvania for back income taxes, you may not think of a bankruptcy as a way to help you with those debts. But, in fact, Chapter 7 and Chapter 13 bankruptcies can both be used as a tool to help you with your tax debt depending on the situation you're in. I'm going to talk about how Chapter 7 can help, and Ken's going to handle how a Chapter 13 can help in some different circumstances. So, the Chapter 7 would be useful to get rid of back tax debt if the tax year is more than 3 years ago and you filed your return more than 3 years ago. Okay? If there is not a lien filed for those taxes, they can be discharged completely in a Chapter 7. You don't have to pay a penny back. Okay? And if you have a lien on those taxes and you don't really have any assets, you don't own a home, you don't own a car, or maybe your car is fully financed, and you just maybe have some really basic household goods, a Chapter 7 can get rid of that tax debt, and the lien doesn't really make any difference since you don't have any assets. Anyway, if your tax debt is more recent, or if you have some assets, a Chapter 13 may be the way to go, because that can help you clear them up in a much better way than a Chapter 7 can.
Right, because you may be facing a situation where the IRS is going to attach your wages, and they take most of your wages. They leave you with about $100 a week, or they may be on the verge of attaching or seizing your bank account. Very hard to live without a bank account in this society. So if you file a Chapter 13, you can take taxes that became due and payable during the past 3 years, which are not dischargeable in Chapter 7, and you can pay them back in a Chapter 13 plan. Now, in this Chapter 13 plan, you can have 5 years to pay these taxes back, and you can pay them back without interest and without penalty, which is a substantial savings, maybe as much as 20% a year that you're saving. You can also take the taxes that are even more than 3 years old, but you didn't file the returns. Now, the returns would have to be filed, of course, because you can't file a bankruptcy with unfiled tax returns, but those can be paid back also without penalty, without interest in a Chapter 13. And if the IRS has a lien, like a lien on your house, you can pay the lien through the Chapter 13 plan too. Now, there would be interest, but the interest right now is only about 4% in Chapter 13, and there's no penalty, and you only have to pay for the equity that you have in your house. So if you have a first mortgage on your house, it's $100, and your house is worth $120, and you have $100,000 owed to the IRS, well, their lien is only $20,000 there, because that's the extent of the equity that's remaining, and their claim can be bifurcated, split into a secured portion that gets paid back and an unsecured portion that doesn't, or gets paid back a very small percentage. So there are ways to handle the IRS Chapter 7 and Chapter 13. Give us a call. We'll go over all your options, or come in to see us. Thank you.